one of the things that an investor in Kenya or anywhere in the world thinks about is opportunity cost. So one of the questions somebody submitted is that given REITs and real estate in general are riskier than treasury bonds, when you think of opportunity cost, where should I go? How do you expect to deliver returns that can beat treasury bond yields with the rental yields in Kenya averaging 5%?
I never intend to beat treasury bonds.
Okay.
And I never will.
Okay.
Not if they continue to be 14%.
Yes.
Maybe if they come down to, during around 2005 to 06, they had come down to 4-5%.
Yes.
But at current levels, debt is very costly in Africa. It's not just a Kenyan problem.
Yes.
Because governments borrow at a very, very high rate. Those rates you're saying,
Yes.
14%.
Yes.
So I'm not telling people, and this is again where I say mis-selling of real estate. You're not going into real estate to compete with government bonds. You're getting in real estate because as an investor, it is important to diversify your portfolio.
That's true.
You can't put all your eggs in one basket.
Yes.
Recently, this last year, Ghana defaulted on its local sovereign bonds.
That's true.
Guys were told, you're getting zero. And then they were told, by the way, you had invested 100,000. It's now 50,000. We are only going to pay you 50,000 because they had to do their debt restructuring. Those things are not risk-free. Now, imagine all your eggs and you're retired are in those Ghanaian government bonds.
Where do you stand?
I'm not saying Kenya is going to default,
Yes.
but defaults are known.
Yes.
The reason people invest in real estate is not to compete with treasuries, money market funds. Those things are important in your portfolio, and we tell you should have them. It is a diversification strategy because real estate carries different return profile and risk profile. For example, unlike unit trust, bonds, and equities, real estate, you're backed by a real asset.
That's true.
There is an asset behind there. You don't wake up, if you are a shareholder of Uchumi, and one day find it's a paper certificate you hold. There's no value.
Yes.
In real estate, even if Akon went bust tomorrow, the property is there. Investors, through the CMA, can still take over the properties. It's an asset-backed investment. And it is important for your diversified portfolio not to compete, because putting your eggs in one basket, I am sure Wealth Tribe, the name suggests the guys want to be wealthy.
That's true.
Show me a single wealthy person
Who has
all
asset.
the money in just one asset.
Yeah, one asset.
Look at pension funds.
Yes.
Why, when we launched our REITs, we had only 11 schemes invested. Today we are approaching 30. Why are they investing? Because they are overexposed to those government bonds, and something could happen tomorrow.
Even banks in Kenya.
Yes. And those bonds will not always return those returns. They will start coming down when the government takes certain measures.
Yes.
As I told you, in 2006, it was down to 6%. So that is the reason you invest in real estate. Don't tell someone, if you want to compete for yield, and that's where many Kenyans have been conned, especially in real estate.
Yes.
Because you're promised 18%. The people want to con you. Akon will never do that. And Vuka, I never want Vuka to try and do that again.
Yes.
That you're trying to lure people, promising them, extremely high returns.
Yes.
What real estate does for you, like what we have in the student housing, and IREIT and Vuka, products like this, what it gives you is, it gives you a cash return, and then the more important thing it gives you is what we call a store of value.
Okay.
Where you put capital, but that keeps appreciating about 5% per year. But if you did that number and you said, I get a yield of even 5, cash, that's the dividend you're talking about,
Yes.
and I get 5% on my appreciation. If you take, just to show you the power of compounding, if you had invested 1 million shillings in 1923 at a 10% return, do you know how much it would be today? That's 100 years. There's a reason I've chosen 1923. It would be 13 billion. That is what you're investing in. It's long-term. And then the other thing, I tell people, don't do it short-term. It's not a short. If you have money and you need it in a year's time, please put it somewhere else.
Yeah, don't put it in.
Kindly.
Yes.
Or 3 years. If you're not looking, this is for your money. And I think looking at Wealth Tribe, it's mostly young people.
It is, yes.
I wish there was something like this when I was 25. Because you can invest small pieces, which is normally the barrier. Real estate, the big barrier is the quantum you need to put down to get in.
Yes.
Even if you're buying a plot in Syokimau, it's still going to cost you $500,000, $1 million. Most people don't have that kind of capital.
Yes.
And even if you do, it's kind of risky to put it in one place, one asset, one location, everything. It's concentration risk.
Yes.
Again, I'm sure you guys talk about that in investment.
We do.
So what this gives you is a way in without needing $500,000.
Yes, access.
Yeah, but not to chase returns. Please tell your guys.
Yes.
Kindly.
They're hearing you.
Yeah, and that's why I'm speaking to you about it.
Yes.
Because that's how real estate Ponzi schemes in Kenya work.
Yeah.
They tell you we're going to give you 1580. You can't get in real estate, by the way, even 30%. But that's on the DREIT side, the development side. But the development side carries risks that you should not pass to retail investors.
Yes.
And that's why even when we worked with the CMA, we said only the IREIT will give exposure into this because it gives you slow but sure returns. If you look at bonds, for example, they oscillate. Real estate, if you have the underlying assets, there is a high demand. It won't behave that way. It is fairly steady, predictable, and then it's a store of value. It's that money you want to store for the long term. And there's a reason this product is called Vuka. The reason is Kenyans have tied $120 billion in idle land. Idle land, not real estate.
Yeah, idle land.
Idle land, plots.
Yes.
I don't know a single Kenyan I've not met who's over 30 who doesn't have a plot. Because that's what people do.
Yes.
Why do they go to plots? They go to plots to store value because they are saying, let me put this, I can sell it when I need it. And I'll sell it for more than I bought it.
Yes.
Of course, that's no longer true. But for many years, that's how it behaved.
Yes.
And so many people bought land. And $120 billion is Kenya's entire GDP. Stored in land. This land is not earning you a penny. Your plot in Syokimau that you bought for 250,000 is not earning you money, number one.
That's true.
Number two, you go and find there are 3 titles.
Yes.
Then you start a legal fight to recover land you paid 250,000 for.
Yeah.
Number 3, then because of that problem, you have to put security. So there are costs associated to holding idle land. Most people don't see it. So that is one set of people. The other set of people, they go and buy a flat in Kileleshwa or in South B, somewhere.
Yes.
You buy that apartment, 3-bedroomed apartment, for 12 million shillings or 10 million shillings. Sometimes you even borrow.
Yes.
Or sometimes you use your SACCO, whatever it is, you buy it. Then the first 6 months, there is no tenant.
That's true.
You're looking for a tenant.
Yes.
Then you find a tenant, but you find him through an agent.
Yes.
You pay the agent 1 month's rent. Okay, then the tenant moves in. Then there is maintenance costs and all of this. And then today there is an even bigger problem because the government is starting to tax real estate severely.
Yes.
So when you add the costs of going either to idle land or to that plot, apartment, you cannot compare. Vuka is a better product.
That's true.
You can buy small pieces.
Yes.
It has its own advantage. Of course, you can still say idle land, I'll still build one day there.
Yes.
Yeah, for sure.
For sure.
But the day you need to pay a hospital bill or you have an emergency, it's kind of difficult to liquidate those things.
Yes.
And it's a big chunk. You have to liquidate the whole eighth acre or the whole apartment. You can't sell a bedroom and say, now it's worth 10 million, but I just need 1 million.
1 million.
Let me sell one bedroom.
Yes.
It's not fungible.
Yes.
But that's why we called Vuka that name, because it was crossover from direct property ownership with all the issues it has to something that's regulated. You will get a regular income. It will not compete with T-bills. And please, if you're chasing just pure yield, it's not the right thing for you.
Yes.
But if you want to grow your wealth over a long time, and that's why you see them wealthy, they have at least 30% of the investment in some form of real estate. But then they're able to access other, like even the IREIT, DREIT directly. Because they can write 5 million check, 20, but the average Kenyan cannot do that. So we created this product, went to the CMA, they liked it, said, let's test it. See how it works, how it's going to work in the sandbox. And we were very successful. In the sandbox, we onboarded over 2,500 retail investors. We showed that the platform works, the trades work, the system works. Those were the things we were testing. And now, suddenly, for the first time in Kenya's history, a guy with 5,000 bob can access a real estate return without taking those risks that I was talking about earlier.
Yes.
That is why it was called Vuka. It meant crossover. Shift from this direct with all its issues. And what we would like to do, a portion of that 120 billion, Kenyans need to liquidate these things and get into financial assets. One of the reasons, why Africa is not growing as fast as we are, we don't create enough financial assets. The rest of the world, if you go to London today or you go to New York or you go to Geneva, you're not going to find people owning plots. What you're going to find is they own mutual funds.
Yes, that's true.
They own, and Vuka is just a mutual fund for real estate.
Yes.
They take life insurance. They do this. They are in financial assets. We need to move away. Africa, we hold a lot of physical assets and they are worth a lot. The Maasai own cows. They're still holding them. This drought of 3 years has decimated their physical assets are illiquid.
Yes.
They are very high risk and they are not fungible. You cannot split it. You can't sell just the head of the cow.
Yes.
And say I need it. So that's what I'm trying to educate the markets around. Why capital markets? Because it is the place you find financial assets. I would encourage your people to continue investing in money market funds. It's a financial asset.
It is, yes.
And it's a good financial asset. And I'm not competing. I'm not saying do this or this. I'm saying do this and this.
I love that because, of course, a lot of these questions are headed that direction of asking you, why should I give you my 5,000 shillings as opposed to putting it in a circle? Why should I give you my 5,000 shillings as opposed to a money market fund and then shillings as opposed to treasury bonds? I love that you said that you should do both. You should have a diversified portfolio.
You have look at wealthy people.
Yes,
they diversify.
Yes,
they have those bonds. They have real estate. They are all over because it's too risky to put your bet. And there's another point I will make.
Yes.
Where we have structured Vuka, generally, if you're not going to invest up to 50,000 a year, then the pricing doesn't make sense. Don't do it. Take your money, store it, maybe put it in a deposit account in the bank till it gets to 50,000 or till you're sure. That's why silver starts at around that level. We say, at least if you're able to do 5,000 a month, you will get there. But if you invest just 1,000 shillings, even your joining fees 1,000 shillings, how are you going to make money out of it? And that's why I say I am passionate about not. So we need Kenya needs financial assets. Yes. And Kenyans need to invest in financial rather than physical assets. But they need to be sold the right one for your right pot, because you need to have all of them.
Yes.
Even a life insurance, it's a financial asset
It is.
for those with dependents.
Yes.
If
Not
you're
for
alone,
everyone. Yes.
you have no kids, nobody, you're not taking care of your old mom. Why are you taking
Why are you
that
taking
thing?
life insurance?
Yes,
Yeah,
so
it's
it's
not for you.
about, let's educate the market correctly. So even Vuka, first, if you're now, maybe in your late 60s, so as you grow older, when you get into retirement stage, you move a lot of your financial into highly liquid, because now at that age,
You need
but when you're younger,
cash flow, yes.
is when you can build your store of value. So the younger you start, the better. And then you need to be able to start small. Now, for a long time, a lot of financial assets don't allow you to start small, like real estate.
Yes.
So that's why we came up with something that allows people to do that.
Yes.
But don't do it to chase. In fact, once if someone tells you that they're giving you a real estate yield like 10%, just run as far as you can.
They're lying.
It is not likely.
Yes.
Not in Kenya. It's not possible.